V. Ramachandran, the COO at Guardindustries, joins in right now to talk about how their numbers has been. Mr. Ramachandran, good to have you in ET now. You've reported a strong double-digit growth in your fourth quarter. Is the demand trend strong? And is that 18 to 20% growth sustainable in the next few quarters, you think?
I think, we had a better Q4, compared to the, earlier part of the year. I think, the year had started with a weak summer last summer, yeah, and also a challenging Q3 because the winter was not very, winter was not a normal winter, yeah. So Q4 has been better in that respect. Having said that, the upcoming summer season has been seeing a good start, fundamentally because the weather is, tough in south and east. Yeah, so I think in that respect, yeah, I think we should certainly see some better results in terms of top line for quarter one. Yeah. Now coming to what has driven this? I think this has been across the board, and as far as Q4 is concerned, it's been across the board, and it has touched all our categories. Yeah. Q1 is concerned, yes, of course, the summer categories are going to more strongly benefit, which is fundamentally stabilizers or inverters, pumps, yeah. Maybe air coolers. Yes, I think these categories will definitely benefit from a strong summer. Yeah.
And what is the overall margin outlook then for FY25?
So as we've been saying, right, that I think we've been saying that there has been delay in pricing transmission, and we had also said earlier that we had high cost inventory, right, which was sitting with us. The high cost inventory, high cost inventory has been charged out somewhere around end of Q3, and which is why you've seen our Q4 margins get better. Yeah. Yes, we are keen to transmit required pricing corrections, right, so that our margins can get to the long-term margin, and we should see that coming through. I think we are attempting, and I think we are attempting to improve our price realization across categories wherever there is a lag in pricing transmission that has happened. Yeah. So I think as we had already said that margin should recover over Q1 and Q2 of the current year. I think we should see that coming through.
So are you holding enough inventory for the summer season?
No, we are. I think we are. See, we are holding enough inventory to meet our plan for what was our plan for next month and the following month. Yeah, but there will be a limitation on to the degree to which we will be able to feed the market, right? And yes, I mean there will be some opportunity loss which will be there, right? And there is some opportunity loss, even as we speak, because for example, after we close the month, the first 10 days or 12 days, or 15 days, we could have sold more because it takes some time for us to build the inventory. Yeah. So yes, I mean, not just us. I think I mean, it will be the story for most companies that there will be some sales loss, right? Because we can't feed all the demand in the market. Sometimes the demand also multiplies. Okay, because when people find that getting inventory is a struggle, retailers may also place more orders also. So, but yes, there will be some there will be some losses. Yeah.
Right, Mr. Ramachandran, but what is also interesting is your ECD segment. When you compare it with your peers also, you've managed to see a very strong growth in quarter four, around a 28% growth. Is this strong growth sustainable even going forward, or was this just a one-off kind of a situation?
Look, I think, as I said, if you look at our long-term growth also, right? So we have been growing in ECD segment stronger than the market because I think, our market position is lagging our brand equity, right? And our brand stature. Yeah. So I think that ECD segment, you will see us continuing to grow faster than the market because our starting position is, what I would say, below our because we have been recent entrant in some of the categories that more recent entrants in some of the categories that we are present. I think the last quarter, that is quarter three, right? Was a strong quarter where water heater has a strong contribution, right? So you would probably have seen that dip because water heater sales would have been a challenge. But otherwise, I think broadly our performance should have been okay. Yeah. And yes, we will continue to grow in ECD. Yeah, and we will grow because of reasons that I said. That we are under penetrated in relation to our brand equity and market presence. Yeah. And we have invested heavily in product innovation, and that's also benefiting us fundamentally in categories like fans, water heaters, yeah, coolers. We should continue to do well. Kitchen.
Just a bit more in terms of the ECD segment. What about the margins also? Because EBIT margin specifically, the EBIT has turned positive this time. So do we expect this turnaround to continue going forward? And what is the expectation in terms of the margin there?
We have to get better on EBIT positive. See, we are making investments in this business. Yeah. So I think, broadly our gross margins are okay. Yeah. But, the scale, is still an issue. Yeah. Of course, now we are getting very close to maybe annual revenues of close to 2,000 crores. Yeah. But then this is not coming out of focus on one category, right? So I think our, it's basically an investment problem. I think that, as the business grows, I think you will see our EBIT margin improve, right? As the share of, as the size of these businesses grow, because the cost absorption is on a smaller revenue base, and that's really what you're seeing as a challenge on our EBIT margins, as far as kitchen is concerned. The other issue on kitchen, right? See, as far as consumer durable is concerned, the other issue with the consumer durable industry has been the slower pass through of input cost increases, right? As we came out of COVID, the input costs have gone up, right? And companies have not passed. I think there are market leaders and there are challenger brands, right? But I think the ability for challenger brands, right, to improve the realization is also dependent on market leaders, passing input cost increases. So there have been some challenge on that front, and I think but I think that situation should progressively change. We've seen that get better, and we hope upcoming year, will be better, right? And if that does happen, I think we should get there faster, right? So it's just not a problem of scale, but I think there is also inadequate pass through of input cost increases here. So combination of these two, right, should get us back to our historical margins.
And what about the Sunflame growth and outlook? The contribution has increased as well to about 5.7%. So what's the outlook down the line?
So I think the Sunflame is a strategic investment for V-Guard, and I think it gives us the ability to participate in the non-south market, kitchen market, which otherwise would take us a lot of time to build, right? Sunflame is a household name across the country, and particularly strong in the northern markets. Yeah. We have multiple growth levers for Sunflame, right? So I think the significant part of the kitchen business is actually in south. Almost close to half the market for kitchen lies in south, and about a third of the market is actually sitting in e-com. Which means, right, between south and e-com, about 60 to 65% of the business is sitting there, and Sunflame is not present in the same way that it is in the other parts of the business. So these are two fundamental levers, which we are going to leverage. Yeah. I think last year, the year that went by was a year of consolidation. I think, we got into the business, we put our systems and controls, we have put SAP in place. Yeah. And operational integration, we are on top of operational integration as we speak. Yeah.
Right. Okay. Great to have you on the show. We'll let you go on that note.
If you like this video, then like, share and subscribe to ET Now.